Happy Sunday, everybody. The pup here with my weekend review. We've got a lot of interesting setups coming into our holiday shortened week next week. Keep in mind, we are open Monday, Tuesday, Wednesday, have a half day on Friday. Obviously, with the U.S. now, we have Thanksgiving on Thursday. So let's get into the charts. And first up, we have snow. I feel like snow is ready to break higher. We're forming a little bit of a cup here. Let me grab my annotation tool. And you can see we're forming a little bit of a cup. Now, we could form a handle, right? We could consolidate into this week before breaking and testing the rim and breaking out. But I feel like once we break out of this 274 range, I think watch 285. Ultimately, I see us back up to all-time highs here at 301. If you are day trading, you could use the weekly 280 calls on the break of 274. Let's go to our next chart. Next chart we have is AAPS. You'll see this chart pattern formation from me a lot. I love trading these symmetrical wedges. When you have a high, a lower high, and you have a low, and you have a higher low, you usually get this price compression, in this range. And what's happening is price is coiling. There's a battle between the bulls and the bears, and we're wanting to see, are the bulls going to win or the bears going to win? I like taking, obviously, these to the upside. So I have an alert set using my TrendSpider system on a break over 41.25. If we do break that, I think we can go to 43.50. And then 46.50, and then upwards of testing that nice psychological round number of $50. Now, what I do for stop losses, and you'll see me say false breakout, what that really means is if we break out of the wedge and then we come right back into the wedge, that's a false breakout. I'm going to stop out of that trade manually and wait for that true breakout that we get. So that's all I mean when I say false breakout. Next up is CHWY. So, we've been trading CHWY for quite some time. If you're not in the trade yet and you want a piece of this dog, wait for the break of this downtrend right here. On the break of, let's say, 69, maybe even call it 70, we can catch 2.5 points up to 171, which is right around 72.50, which is right around our all-time high, and then a break of that, and we could see upwards of $77. So that's how I would play CHWY. Next up is Donkey Kong, aka DKNG. This has been an interesting move here. Possible wave 1, 2. We might be in wave 3 here. We can see an extended wave up to the 618 if we break $50. And then what I would expect to come down is have a wave 4, possibly testing this 50 to 48 range, maybe right on this shelf. And then right back up, potentially back to 58, and then also looking at potentially back to 65. One idea, you can use a 55 call for next month's monthlies at the 12.18, or if you want to buy yourself a little more time, those are actually at $1.55 if all things being equally open up at the same price. And then next I would look potentially for the 115s at 310. That buys you more time to potentially get back to 55 or upwards of 65 if things look pretty good. Okay, next up is Fiverr. Not saying I necessarily see a great trade here. Obviously we would be looking at an all-time high breakout. But with these broadening formations, you usually see 5 touches. So you have 1, 2, 3, 4, and now 5 coming right here. So watch for a 5th touch breakout. You can play the weekly options over 200 to potentially 208. But if you wanted to go a little further out and you think, we get the breakout, we get the retest, things are looking great, then maybe looking for 230 as your next target for the broadening formation on Fiverr. Next up is GME. I thought this was an interesting trade, just kind of playing around with an idea. I think, we have a supply zone up here where we have bag holders sitting from this drawdown. And so as we come back up, you could see we're making a high and a higher high, a low, a higher low, and potentially looking for a new higher low here. I think this could be your entry, clearly risk-defined entry here, maybe at around 12.25, using a stop loss under this low here at 11.50. If we do get that bounce, I'm looking at 13.42 and then 14.22. Maybe we come down, test that 13.42 breakout, but ultimately I'm looking to see us back at $15. Now again, we have bag holders sitting up here. So if we do get back to this level, I expect the choppity chop. So if I were to take this trade, I would look for an ideal entry on this volume shelf here and taking it up to 15. You can use maybe the 13 calls, the 14 calls, but I would go out and give yourself some time on here. Next up is IIPR. So again, my favorite one of my favorite formations, the symmetrical wedge. We're coiling pretty hard in here, right? You know, it came up, hit a high, hit a low. Now we coil, and we're waiting to see if we're going to break higher, if the bulls are going to win, or if we're going to break lower, and the bears are going to win. Regardless, we have a volume shelf that has formed. You know how I like these volume shelves. How do we find it? We anchor to the capitulation low down here. As we move up, our point of control is right here at our volume shelf. If we do break 151.51, or you can just say 152, or sorry, 155.51 or 156, I think we start making our way up to 170 and then 178. Those would be my targets for IIPR. Next up is INDB. I always do that. But think of it, I watch too many movies. It's INMD, in mode. We have a nice cup and handle forming here. Again, you know, beautiful rounded base with your rim up here. Sorry, my drawing tool is a little funky, but you got the cup handle right here. We've broken the handle here, and now we're testing that rim. We got rejected by the rim. We retested the handle breakout. I expect us to come back up to 45. Watch for that break of 45. If we break that, 47.25, $50, $54 are my targets. Again, false breakout. If we fail, we break out and we fail under the breakout level, take a minimal loss and wait for that next ideal entry. This is all about trying to time the right entry, but also about capital preservation. We can take small losses. I'd rather take 1, 2, 3 small losses, and hopefully that fourth potential trade, that one is the one that hits it out of the park. We get a double, a triple, or a home run, and it more than makes up for those 1 to 2 small losses we were trying to time these breakout entries on. The other thing you can do is wait for the daily close over $45. That's a safer way to trade it. Wait for the candle to close, or wait for the breakout close and then the retest of the rim. That's a second way to take it. A lot of the times when I approach trades like this, if I'm unsure if we're going to break out and hold, I'll add like 25% of my position on the breakout and another 25 to 50% on the retest. And then if we retest and now I'm at 50% of my position, I would buy the next break of the high from that initial breakout and add the rest of my position, add the rest of that 50% of my position there, and then start moving my stop losses up. The key is once we hit a target and we break above that target, you need to move your stop losses up. There's no sense in letting that trade turn around on you and coming right back to break even. Move your stop losses up. If you move your stop losses up, you lock in profit. I'd rather have you lock in minimal profit than have this go right back down to zero and now we're at break even. So for me, that's a wasted trade. If you move your stop losses up, right? You move your stop losses up, we hit this and we reverse and you stop out here and price comes right back down to the rim to retest it, guess what? You got a second chance of another entry. So that's the way I look at it. And if you miss the trade, there's always going to be another trade. We love to say that in the room. Next up is JD. So I did an interesting post on JD. JD had this is the 65-minute chart. It had an island bearish reversal here. So gap up, rounded top, gap down, right? So that's a bearish island reversal. But right after that, it had a bullish island reversal. Gap down, right? Gap up. And so I've seen this a couple of times. I have to look back in history and see what, if any, this really means. But all I know is we are back in an ascending triangle. So what I'm watching for JD is to potentially come back and test this 92.50 level. And if we do break out, I would target 96.72 and 101.74, keeping in mind that's right in between our 100 psychological level. I do think JD starts to make its way up. Where would this trade break down if we lost this trend line? Very simple. Let's look at our next chart. Lemonade. So Lemonade is looking kind of sweet. We do have, again, our symmetrical wedge, one of my favorites. I'm going to keep saying it. So again, we move up, we make a low, we make a lower high, we make a higher low, make a lower high, a higher low. And so all of these movements are making this compression zone. And so as price gets compressed, we look for the breakout. Again, do the bulls win or do the bears win? But regardless, we're at a volume shelf. And so, again, I will reiterate myself. I'm going to beat this to death. When you're at a volume shelf, watch for the breakouts. These tend to act as launching pads if we do move up. So, you can buy the break over, let's call it 65.50, or a little safer over this candle right here, which is right around $68. I think that would be a safer entry. But again, you can use the rules that I just explained in the previous trade. Take 25% here, take another 25% here, add the rest on the retest. So it's a simple way to do it. If the trade keeps going, at least you got 25%. But if you don't get that retest here and you get it here, you got 50%, right? 25 and 25. And at least you got a piece of the action, right? That's the way I like to scale into positions that if I'm not super confident if they're going to run or not. If I'm very confident that this is breaking out, all my moons align, I have the volume shelf, I have my my moving average cloud crossover, I have other areas of confluence like fib support underneath, symmetry. I start adding all the pieces together. If all of my moons align, I will go, not I was going to say all in, but I'm not going all in, but I would use 100% of my position size that I feel comfortable with in entering the trade. But if I feel less confident, then I start scaling back. Maybe I'll do a 50%. Maybe I'll do 25%. That's how I mitigate risk on my trades. So that's Lemonade. Next up is MRVL. Sniper Gang called out MRVL in the room on, I believe, Thursday or Friday. So I do like this back over 44.51 for a target of $50. It's been in a very clear daily up channel. Higher highs, higher highs, higher highs, higher highs. Low, higher low, higher low. And so, one way to look at it is we could take the trade over 44.51 right to 50. Or if we come back down and test the bottom of the channel, watch for a retest and take that back up to 50. A lot of ways you can play that. Next up is Nikola. Nikola's been popping up on the radar. We did get some news about GM. I don't know exactly what the news was, but you can see my moving average clouds are starting to cross over. We do have a break of this downtrend line right here. So keep an eye. I think a safer entry is probably over 33.50. So we can get, maybe make, the low, a higher low, make a high, and then a higher high. I think at that point, we're going to look to see, does a channel start to form that may look something, like this. I think that's what we're ultimately looking for. But, I think using a clearly defined risk, even if you were to take this entry here, you can use a stop right under here, like around $17, $18 if you're thinking long term, because the risk to reward is potentially this coming back to $92. Now, will it happen overnight or within a week or a month? Maybe not. But, we have history of price to tell us where our levels of potential resistance are going to be. So keep an eye on Nikola. I think it could be an interesting trade. I don't see it actionable just yet. I want to get further price confirmation to see that we are in an uptrend or a downtrend reversal. So next up is NVTA. This is something I've been talking about in the room for about a week or two now. We have been patient, but we are breaking above our swing high anchored VWAP. We've been holding above here. So ultimately, my safe we've missed our aggressive entry, or I personally took it. I don't know if you took it, but our safer entry has presented itself at $48. I think now over $48.37, we can start making our way back up to $55. Again, break back under this downtrend line, I think would be our stop loss. Okay, next up is Personalis, PSNL. I just like the setup here. It's got a nice rounded bottom. Possible to see a handle, right? Cup and handle, but if not, we could see just strength and just break out over 31. I'm not looking to do options on this. I'm looking to start building common shares on this particular trade. So next up is TWLO. TWLO has been looking pretty strong. You can see we're in a nice up channel here. We could possibly make our way back up to 340 over the next, let's call it 4 to 6 weeks. So keep an eye on that. I think this offers potential for nice movement over the next couple of weeks. I think, again, trigger over $300 will be good. Next up is Twitter. Twitter has a nice gap up above. Took, I think, the 55s for February, if I'm not mistaken. Sorry, my computer is a little fritzy here. Bear with me 1 second. Let me grab my annotation tool. So watching to see if we get that break into the gap here at 45.21. I think if we do, we can make our way up pretty quickly to around that $49 to $50 level. So 50 would be my first target. 53 would be my second target for Twitter on a break of 45.21. Next up is U. U has been one of my favorite trades. It has been a wild ride, pretty big swings here. High channel, low channel, high channel, low channel. But we're finally holding over the top of our channel here. So we might be ready to move higher. We've already got our first target, our second target. I'm waiting for 131. That's going to be my final target. And at that point, I will decide what I want to do with my shares. Next up is Uber, another nice setup. I'm not showing the right shoulder here, but we have the head. Left shoulder over there. We have the head. We have the right shoulder. We have a nice symmetrical wedge breakout over our rim or our neckline. And so now we're starting to kind of pen it up here right around $50. So I'm watching for a break over $50 on Uber. I started to add 55 calls, I believe, for either January or February of next year. And I do think once we break over 50, 55 will be our next target. And then ultimately upwards of $59 to $60 will be where I'm looking for this to go. Next up is WDAY, also known as Workday, WDAY. We have another beautiful symmetrical wedge formation. Going to beat this one. So high, low, lower high, higher low, lower high, now again, higher low. So what's interesting about this is look at where price stopped, right on our wedge. And so this provides us with a very clear risk to reward ratio. If all things being equal and we open up at 209, and we take an entry here, you use a stop loss under our low here, which is at 276, but the reward is 248, which is all-time highs here. Of course, there's going to be levels that we have to watch on our way up, but I think this offers us a very clear risk to reward opportunity. Do like the company as well. And next up is Work. Work has a nice double bottom here. We are in a downtrend channel. However, I am watching for a break over $31. I think over 31 we can see 32.50, and then I'd be looking for 34, 36, and then all-time highs up around $40. Do like Work long term. And last and not least is Z. Did a bit more of a write-up on this. I posted it to social media just to give the non-OTE members an idea of how we approach our trades. So I thought this was a really interesting trade. I know Nick said he had taken it last week and he had stopped out, possibly on this candle right here. I don't know. But I can tell you what I see is obviously an inverse head and shoulders. Not only do I see an inverse head and shoulders, so check, I see a cup and handle. We've already broken the rim, the handle here. I'm waiting for the break of the rim, which is here. So we have a cup and handle. What I would like to do on this is buy a close over the break of the downtrend line here, add on a break of the cup and handle rim, or this was the neckline for the inverse and shoulders. This is the rim for the cup. That's my 50% position. I have 100%. And then my targets would be 55, 50, 55, and 65, which is all-time high up here. I've set my alerts on TrendSpider. That will come into the room. And the other thing I noticed is that we have a nice up channel right here. So low, higher low, higher low, high, higher high, higher high. I'm waiting for that next higher high and then the breakout. So that is my weekend review. I hope you've enjoyed it. If you have any questions about any of these charts, please direct them to me in the room. I will be posting these charts, or they should be already posted in the room once you review this video. And again, thank you so much for being with me and being with OTE. I hope you enjoy your stay with us. We're all about learning so we can be earning. So thanks. Have a great rest of your evening. Let's see you in the markets. And remember, holiday shortened week. Monday, Tuesday, Wednesday, we're on. Thursday off. Friday, half a day. Have a great night, everyone.